Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. I'm Harvey Free. Next to me, John Kolb. Hey, John.
What's up, Harv? How you doing today? Happy Saturday.
Happy Saturday to you. It's December 11th, 2021. We've got Harry Glanz joining us on the Zoomcast. Good morning, Harry. Fantastic. Kevin Stewart, Stewart Team Real Estate Partners, as always in downtown Rochester. It just rolls off my tongue.
You got it now. You've got it dialed in, which I'm really excited about.
It only took, 3-4 years?
3 or 4 years. It's not that bad.
Not too bad.
It's no big deal.
We're going to take your calls live here. We're going to kick it back a notch. And, you know, sometimes our show, John, as we've talked about and Kevin before, gets into the due diligence and the, heavy duty on the inspections and a little scary. We're going to dial it back a little bit and just invite some buyers and some new buyers to give us a call. The ones, John, that can get excited, Kevin, that can get excited now and maybe find that window of opportunity early in 2022 versus this low inventory and battling for that house come this spring.
I love the idea of talking buyers today because the entire year and probably for 12 plus months, it has been so stinking difficult for buyers. And I can tell you for the first time in almost a year, buyers have opportunities. They actually can get excited about real estate again. I think that buyers can start to get rejuvenated. Last time I was on the show, we talked a lot about buyer fatigue. I think some of that has settled down a little bit because the market has just come a little bit back to reality instead of absolute insanity. So I'm excited about the idea of talking about buyers again and the opportunities that buyers may have inside the marketplace.
Yeah, the one thing I really love about Kevin and his team is that they never really got away from buyers, right? You get some agents out there that got away from buyers because it was so hard. But Kevin, and Jessica, they've got their boots on. They're out there just in the trenches, making sure that they're helping those buyers and never lost focus. And that's going to be huge for your 2022 because it's going to just keep you in touch with all the buyers that are out there. And like you said, there's some new opportunities. There's not the appraisal guarantees aren't as prevalent, and it just makes for a better it makes a happier, better transaction all the way around. What do you think, Harry?
Yeah, so that process has changed pretty significantly in the last 2 months. So what we've had to do for 8 months is put in, we're talking extreme measures in order for that buyer to look appealing to a seller. Sellers were getting 7, 8, 9, 10 offers on their property. So we were trying everything and anything to have that deal stand off the table. And we have been able to back off some of that. So having to get into the conversations of full appraisal waivers, we haven't had to do that in a little while. We may have to waive a portion of or a safe measure of, but we've been able to back that off a little bit. We were using the inspection for pass-fail inspection for informational purposes only. That was one that we talked about a couple months back on the show. We haven't had to use that as much recently. We've been able to just put in a standard inspection contingency, allow our buyers to get some due diligence. So some of those criteria that we have been making and the buying staff has been putting in offers has been able to be a little bit softer because they may be competing against only one or two and sometimes competing against none. We've actually been seeing some properties that have been on the market for 20, 30, 40 days. And we've been able to go in and actually make offers on those properties and actually, go figure, negotiate a deal.
What?
Oh, my goodness. It's actually amazing to think about.
Now, there's no doubt, though, that the sellers are getting top dollar. That's sort of a truth.
Oh, absolutely.
They're already getting top
changed.
dollar, right?
That hasn't changed at all. But what has happened is some of those sellers have gotten so big with the numbers that they think their home is worth. They still think that the market is going up 20% a month, some of these individuals. And so, having agents and having brokers that are willing to have the tough conversations with sellers about the realistic nature of the market and make sure that they still price it accurately and not with these ultra aggressive numbers does change things. And so that's why you've seen some people come backwards a little bit because they got a little bit too aggressive with where they wanted to place the price on their home. So it's very important for everybody to look at exactly where the market conditions are right now, because they are changing that rapidly.
And you're seeing a huge disparity in neighborhoods now. There's some houses that, like Kevin was saying, early in 2021 that were selling for $20, $30, $40, $50,000 over asking price. And now that we're dialing it back to a norm, those sales are still out there as comparables that we, can use on our appraisals, but it's not necessarily what's indicative of what's going on right now. So you're seeing a huge disparity. Harry and I were battling an appraisal last week where there was almost a $200,000 disparity with homes on the same street, $350,000 all the way up to $535,000. And you had to get a good appraiser out there that knows the area, knows why and what and how, to make sure that this makes sense. And it's hard. It's hard work.
The appraisers have had a hard job in the last year, because keeping up with the current conditions is very tough, because that 6-month rear view window that everyone wants to look in, it could be completely different. We've had times where it's way too low. We've had times where it's high. We've had everything in the last, especially 12 to 18 months.
Right? No two appraisals come in the same, that's for sure. Homeowners continue to build wealth in today's market. Harry?
Harvey, I think that's a great point that Kevin just brought up. How many times are you going to hear a realtor and mortgage people agree that appraisers have had a tough time? Okay, so all you appraisal people out there, Mike Tomczyk, Paramount Appraisals.
Oh, he's eating bonbons on his couch.
Yeah, we understand. We understand it's a tough job, but you signed up to do that job. It's a tough job, so you're going to get questions. You're going to say, people always think that their house is worth more than it really is. Harvey, we talk about it all the time. They think their kids are better at sports than they really are. Well, people think that their house is worth more than it really is. So, appraisers, we're all on the same team here. Realtors, appraisers, mortgage people, we're on the same team. We're motivated to get that job done for our clients. So everybody out there listening, everybody is on the same team, pulling and motivated by the same thing.
And the best appraisers that we come across are the ones that are willing to have those conversations with us, right? Not that we're trying to sell the value, but for us as the real estate professional and the broker to say, this is why the value is where it is. This is why the number does make sense. Here are the factors that you need to make sure you're aware of. We're going to respect your opinion, but we wanted to make sure that you understand the basis that the buyer and the seller are coming from with the value of this home. And the great appraisers, they will get on the phone and they'll have that conversation with you. They won't always, but some of them will, which I really appreciate.
Right. Open mind versus closed mind, right? Have a conversation, hear out why they put the market on, or the house on the market for this value, and then make your determination. You may not agree with it, but at least you can listen and understand and have a conversation
and
about it.
And that's us working together, because we acknowledge all the time that their job is very difficult. I acknowledge that to them all the time. I know your job is hard. But let me tell you a little bit about this property and why everyone in this transaction has agreed upon this price. This is why we've agreed upon this price. And having that conversation does matter.
Right. Things that can change quickly, definitely real estate, the mortgage market, these things change very quickly. The way we do business can change pretty quickly. Bridging the gap has been the thing. Bridging the gap between these outrageous purchase prices, which are typically get to win the bid, 10 to 20,000, 30,000 over. That's a lot of money to come out of pocket for. Yeah, if the house is in moving condition, Kevin, that's where the knowledge comes in, and you can really figure out the area. You're in that district you want, the school district you want to be in. You're in the location. Maybe you want to be in a walkable town. Bridging that gap and figuring that out is the key to really having success in home ownership.
Yeah, it's an important gap that we have to bridge all the time. We have to understand that gap between the value of the property and then how much money they need to put into the property and then how much money does come out of their pocket. And when you have this type of mortgage climate with interest rates where they're at right now, having people borrow a little extra is not a bad thing. You're borrowing money at incredible rates.
3%?
Yeah.
Or less, sometimes still. That's right. They're at all-time lows. Our show's been on for all-time highs. We're coming up on 23 years. In fact, John, next week will be our last show for 2021. Keep it here on 97.1 The Ticket. It's the Hardcore Mortgage Real Estate Business Show. We give you answers on buying, selling, and a whole lot more. Alrighty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, Equal Housing Lender. You can reach us all week at Capital and throughout the holidays, John, as we're continuously getting calls. We're doing a lot of debt consolidation for families, refinancing so many families out there. And you know what? We're educating people. And then, of course, with the pre-approvals and everything, John, home ownership, there's a lot to know. This isn't something that you just call some guy. And John, you know what? Sometimes we ask these real estate agents to refer us business. We want to help their buyers get to where they need to be.
Yeah, we want to do the service that we know how to do the best. I mean, I always like to, I always say, if people don't want to work with me, then, that's okay. But, give me an opportunity to show you how much effort and love we put into each and every file and to make sure that the client is treated like family. And I mean, that's just a huge, huge attribute to our company of how we do things. We're not looking at bottom lines of, what the company's going to make per transaction. We're making sure the deal's getting done. People are happy in the home and want to refer us out. And that's kind of how I want to do business moving forward for the rest of my life, or living life, I should say, is just work with me or deal with me if you want to, because of the way I come about and do. And that's Harry, we're 30 years in 2022 we'll be in business. And that's just the way that Harry built the business, right?
Over 30 years, just helping people save money and making sure they take care of it. But also, the art of home ownership. It's not easy to own a home. There's a lot more than goes into owning a home than just making a payment. So we try to help people, and the key word is educate people on what the responsibilities are, make sure they're happy with the transaction so they can go ahead, raise their family, and live a long life in that house.
Hey, Kevin, record high as we talk about the values have just gone up. It's maybe 45 years of some of the highest appreciation ever. Now, we saw a little window there where it looked like there was going to be more inventory hitting the marketplace. But, boy, that kicked back right away as we got into the typically slower months.
Yeah, it kicked backwards a little bit. We thought it was going to really start ticking upwards. We were looking forward to a little bit more inventory coming on, and I think that you're going to see that coming into the new year. I think that you're going to see in January and February some nice new inventory hit the market, but we got the typical December slowdown. A lot of people that think, hey, I should not sell my home because of the holidays, because of all of the hustle and bustle of the season. So therefore, let's just wait. And my argument back to those individuals would be, don't wait. Actually consider selling your home right here, right now. Get your home under contract before the holidays. Get your home, prepared so that you can move into the new year. And it's an opportunity for some of those individuals to take advantage of even less inventory than we've seen out for a while.
Well, then you also have when your house is prepped for the holidays, you've got the buyers coming in and seeing what it can actually look like for the holidays, So it gets the image right in the, I can see myself having Christmas here. I can see myself having Hanukkah dinner at this table. Whatever the case may be, and it just gives them the new visual that they can take a look at. So why wouldn't you put it on the market just to give yourself an opportunity?
I can tell you, there's never a time at my home where it feels more like home than it does in December. My wife does a fantastic job of decorating our home. We're big Christmas tree fans. We have them everywhere, and my house feels different in December. And so, there's something to say for that. There is a warm, fuzzy feeling that I feel most people understand this time of year. And when you see that, sometimes it's a good thing. I was asked, should I decorate my home for the holidays? I'm getting ready to sell. You should.
100%.
Like, maybe don't go crazy. It depends on what your definition of decorations are.
Right.
But throw up some good decorations, make it feel homey. When somebody comes over, toss on the fireplace, things like that, because it's going to feel different for that buyer. And buyers want a connection to their home.
Yep.
They want to feel as though it's a home. A house and a home are two different things. A house will sell for one price. A home will sell for a completely different price. If you can make them feel that house is their home, you have them.
You could do that for all seasons, but I love the idea. You might as well enjoy it for the holiday season right now and really dress up that home, which sounds fantastic. And it could smell nice, and it's going to be clutter-free and all those great things that you're going to do anyways. And
then you don't have to take down the lights if you sell it. Right? You got all the lights on the outside.
Exactly.
You don't have to take them down. That's the biggest pain in the butt to do.
Sell them with the house. Hey guys, this comes with Christmas lights.
Yeah, look at the new neighbors. They still got lights up here in the middle of spring. 248-539-9797. We do have a couple callers calling in if we can get those back up. And again, we definitely want to hear from you if you're buying or selling a house. It's really exciting. Staging and dressing up a home is crucial, and it's become the new norm if you want to get top dollar for your house. And again, all the real estate agents fighting over the low inventory out there. You know, what new information can you bring to, we'll get into this a little bit here. What new information can you bring to a seller? But let's roll out to Grozeal, one of my favorite places. And Holly, you've got a question. Go ahead. Good morning.
Good morning. We are looking at buying a rental property up north, and it's in a condo association. It has a shared well and a shared septic, and we were told that we may possibly need to get a special type of loan.
Well, I mean, that depends. Is it a condo or is it a home?
It's a home.
It's a home. So it's, it's just a condo association, so it's a site condo. But because so you're saying that you might need a special type of loan because it's a shared well and a shared septic?
Correct.
Shared with who? The neighbor or community
the
well?
Community. The community.
Well, there's a neighbor that's two houses down that has. So no, it would be a community because there are a few that have their own private wells. But this particular house,
The whole city of Waterford's a community well, believe it or not.
Yeah,
John, if you want to jump in here, I can't come up with a reason. Have you run into anything yet? Are you moving forward with buying this place?
we would really like to, and we were told that someone else that was interested in it had came against some challenges, and so I just, this is the first call I made because we've refinanced with you, and you guys have done great with us. So I just thought I would go right to the source and find out if it was going to be a problem.
Nice. We appreciate you. Thank you. So, we'd have to do some digging, obviously, outside, which we're happy to do.
Yeah.
The number one thing is that you're going to be buying this. The other person may have been buying it as their primary home. It might have been an FHA loan, where FHA for wells and sewers has different requirements, where you're going to be buying it with a conventional loan, 25% down, and we don't dig into the well and the septic as much as we do on a government loan. So it might be okay. Now, the other thing you have to, kind of look at is what do the bylaws of the association say about buying it as a rental property? Because they never want to be super heavy-handed in rental properties in their community. So
that's fine because that's what they've been using it for in the past, and there's quite a few of them that do that.
That's
so
fine.
that doesn't appear to be a problem.
Hey, Holly, it's your second home, and it could be used to, you could actually buy it as your second home. Kevin, you want to jump in with something? You don't have to buy it as a rental. That's for sure.
Holly, check this as well, because some HOAs do have different rules around how you can rent that property. So they may have specifics on, for example, are you allowed or are you not allowed to Airbnb that property? Can you rent it for singular nights, or do you have to go to weeks or months or quarters? So some HOAs do have some specific bylaws on that. So I would just double check that, depending on how you guys want to use this as a rental property, whether you want to get someone in there that's long-term, a 12-month annual type tenant, or whether you're looking to use it. I know a lot of up north properties, people are looking to do more of a Airbnb style, weekends or weeks that they're renting those to families. So just keep your eye on that as well, because we've run into that as a potential issue in the past.
Yeah, Holly, we'll give you a call after the show. Go ahead.
Yeah, that's what we were going to. We were looking more at like, okay, we can rent it out, 10 weekends, and then we'll have it for 4 weekends. We like the area.
That's not necessarily a rental property.
So we're not going to be able to go a lot, but for mixed use.
Yeah, well, that might not. We can dig into it, but it might not be considered a rental property at that point, which opens up a lot other options, many other options for you, better options. So yeah, we can dig into that for you.
Sounds like it's going to be a second home purchase that you get to enjoy, and when you're not using it, Holly, your family's not using it, you might rent it out.
And when you rent it out, that person's going to pay the mortgage off.
There you go.
So
exactly.
It's a beautiful situation.
We like what you're saying. We're going to give you a call. Always follow up with you after your show, and we appreciate it. Again, Holly, these questions go out there to everyone listening, so it helps lots of families out there looking to make these types of purchases. We really appreciate that. Thank you.
Thank you.
All righty.
And I want to touch a little more on that. I mean, what Holly's doing is actually really, really cool.
Yeah.
A lot of people don't think about that. They think about owning a rental property as a long-term type thing, where they think, hey, how would I ever own a second property? How would I ever own a home up north, or a home in Florida, or a home in a vacation location that I want to live in long-term? the way Holly's describing is one of the best ways to do it. Purchase that property, make sure it's something that doesn't have rules against short-term rental.
Right.
And I can tell you from experience, those short-term rentals can virtually pay off a property if they're purchased in the right location.
Right.
And over time, over 10, 15 years, you have allowed someone to pay off your property. You still get to use it on occasion for a vacation here and there. And then when you're ready to use it more long-term, you can cut off that rental and you own that property free and clear. It is a wonderful investment tool that a lot of people don't consider and think about. It's a neat idea that she's doing.
Right.
It's your vacation home.
But you definitely have to take a look at what your association, what your community will allow, because, well, we'll talk about it when we come back.
It's extremely important.
All right, we dig into things, that's for sure. 248-539-9797. Taking all your calls this morning. If you're buying or selling real estate, this is the show. Alrighty, welcome back to the show. 929 if you're just joining us. It's the Hardcore Mortgage Real Estate Business Show, again brought to you by Capital Mortgage Funding. I would just say I was going to drive everywhere yesterday. I was in Romulus. Now, I didn't go to the closing in Canton. I had to go to Canton and Howell, and I'm running around all these places, and I don't know, John.
Harvey, you're big time. You go to your closings?
Yeah,
Wow,
I still go to my closings, John. They're fun.
Hey, we're still real people, you know. We make it to the closings. We, make sure that our clients are happy, bring them a coffee, do what we need to do to make sure the transaction goes smooth. You know, we like to see Kevin's smiling face across the table when we can. And, I know Harry's always at closings, whether that means he's actually on the golf course. No, I'm just kidding, Harry.
1-800-LOW-RATE. We try to make it easy for you. That's 1-800-LOW-RATE. So it's 1-800-569-7283. Capital Mortgage Funding. Been around for 30 years. Again, here to service you. Harry, we always say we're looking for that 10-star review. We've got a couple million of those, I think, laying around the office, eh?
Yeah. Hey, John, I'm not the guy that plays golf. That must be another mortgage guy you're thinking about. But
oh, yeah.
In any event, yeah, we do go to
Made
our
him feel good.
closings, and Harvey, like you said, 10-star review, 12-star review, it really doesn't matter. Over 30 years in the business, our clients are the ones that call us the best mortgage banker. I know we trademark it, but we got that from our clients because our clients are pretty pleased with what we do. And getting back to Kevin, I have a question for you. You're still working with a lot of buyers. There's a lot of buyers out there. So it's just a simple math equation. We talk about it on our podcast, John, Harvey and I, we talk about it, Harvey and I specifically. If you're looking at the fact that you're working with a lot of buyers, which you are, and there's a lack of inventory on the market moving into 2022, wouldn't that indicate that 2022 is going to be another fantastic year? Because it's really the law of supply and demand. If you're working with a lot of buyers, there's a lack of supply inventory, the prices aren't going to go down. They're really going to go up. And you're going to have another fantastic year in real estate. It's going to be very, very strong for 2022, correct?
I couldn't agree with you more. I think the 22 market is going to be every bit as good as what we just witnessed. I think it's going to be a little different in some of its nuances in my prediction. I hope it's going to be slightly more stable in that supply and demand conversation. That's what I'm hopeful of. I think that creates a better situation for the market as a whole. But I think it's going to be an extremely strong real estate market moving into 22. I've had a lot of people tell me that they believe the market is going to crash. They think things are going to take a major pullback. They will list off reasons that they believe that's the case. I couldn't disagree with that more. I just don't think that's going to be a thing. Every economic indicator that I keep my eye on regularly, I've spoken with both of my financial advisors and had all of my financial relationships. I'm constantly having conversations with those folks to talk about the economic indicators that could cause anything to pull back, and there is no indicator outside of it going better, outside of it going higher, pricing potentially continuing to go up at a great clip. And like you said, it is a supply and demand conversation. And right now we have a ton of demand and not enough supply. As long as that stays strong and interest rates and money stays inexpensive, there's no way the market goes anywhere but up. It's impossible.
And you can tell because Fannie and Freddie, they just increased the loan limit size, right? So now the conventional loan limit size across the U.S. is $647,200. And in high balance areas, it's almost $1 million.
Wow.
That's Fannie and Freddie and the economists behind them are not going to just increase the loan limit because things are going to crash. They're increasing it because they want people to still borrow money at conventional rates with conventional guidelines at a higher dollar amount. And that's just part of what's going on in the industry.
And people have more money than they've ever had right now. The truth is, take off the table what you want, but there's a lot of money in our economy right now. There's a lot of actual physical money inside of people's pockets right now. We're at one of the highest amounts of liquid cash per family in the United States that we've ever been in its history. And so that tells you right there, people have money, they're going to be willing to spend it. A lot of people have still been sitting on the sidelines of the home conversation for over a year and a half. There's still people that have been sitting there on the sidelines thinking, I'm going to wait. And if those people start to get off the sidelines at any type of rapid rate, it's going to continue to go up even higher. And so when you look at the amount of available funds that the average U.S. family has in comparison to the cost of money and the value of home ownership, I don't see any reason on that spectrum for anything to go anywhere but up.
All right, listen, we take your calls here, 248-539-9797. Kevin Stewart, Stewart Team Real Estate Partners, Harvey Freed here, John Kolb, Harry Glanz. If you want to call in, 248-539-9797. Interesting phenomenon called the pandemic that jumped out at us. Now homes sell. The average is at 100.5. It's over what the asking price is because so many houses go over and above the original list price.
That's the supply and demand conversation that we were just having. Is the supply has been so low, the demand has been very high, therefore people have had to go above asking price in order to lock down a property. And the speed in which the market has grown in the last, since the pandemic, has happened so rapidly that it's had to go above asking price. People have had to come in and pull and draw in cash because they can't keep up with the rear view value. The rear view value doesn't matter anymore because it's going up at such a rapid pace. We've had people that bought homes literally 6 months ago that right now are sitting on significant equity cushions in 6 months. We've had people that bought a home just coming out of the pandemic, bought a home and are sitting on extreme cushions. We're talking refinance cushions, refinancing their way out of MI, things like that, because it's grown so stinking much.
And that's one of the pleasures of being able to work in this type of situation where you get like someone put 5% down, 10% down just 6 months, 12 months ago, and all of a sudden you can turn around and get them out of PMI and get, they can pay their own taxes and insurance at that point, and just gives them so many more opportunities to be able to help them save money, and they didn't have to come out of pocket with everything they had, to liquidate the banks. And it's a great thing to see because it helps people succeed.
And that's a value add for the consumer that I don't think they understand. Having a relationship with a loan officer, with a mortgage loan officer like you guys, when they have that relationship, you guys are going to keep an eye on that for them. You are going to help create and talk through that conversation with them even well ahead. They may not be thinking about it. And so sometimes when you're the relationship you have, that loan officer calls you and says, hey, are you thinking about refinancing? Don't think of that as necessarily a marketing call. Think of that as a relationship call because that's why they're doing it.
Right.
John, if you're calling out to somebody and you're saying, hey, I really think you need to consider refining. Why? Because we can take you out of certain programs and put you into different ones and actually decrease the amount of monthly cost coming out of your family and free that up for things like savings, for taking extra money back and putting it towards a vacation home. There's a lot of things we can do, and we have freed up.
If there's not a benefit to refinance, we can't do it. We can't refinance you to put you into the same interest rate or a higher interest rate.
There'd be no point.
And there's no point, and there's no way to get it done. I mean, we have guidelines and compliance that we have to stick by. And it's just, so yeah, you're right. And it's part of that relationship. And I always tell people, I get paid to write loans. But if it doesn't make sense to me to do your loan, then why would you do it? I'm going to tell you the truth.
And guys listening out there, for anyone who's listening, I can attest to that. I've been in this business, coming up on 17 years. You guys, I know. Ooh, sheesh. You guys at Capital do such a phenomenal job of taking care of the customer and telling them when they shouldn't. Guys listening, it's not about a sale for these guys. It really isn't. They are looking to take care of you long term. It's about the long-term relationship. It's the long game. It has nothing to do with the transactional relationship. These guys are anything but transactional. And it's the thing that has my team so interested in working with you guys day in and day out, because we know it's a long-term look for you guys. And that's important because we feel the same way. We work our company in a way that we want to have a lifetime relationship with a customer, and we want loan officers that do the same thing. And so, for those that are listening out there, they need to understand it's never going to be transactional with you guys. It's going to be about long-term relationship. And that's what you want as a consumer.
And you're growing your team, aren't you, Kev?
We are. Yeah. We've added a couple new people.
Yeah.
We're definitely in a growth pattern, have been for a while, and this year we're really excited. We've got a couple new sales folks. Ariana's just come out with us. We're really excited. She's has sold in another state. This is her first time selling in Michigan, but she's already turning on as a superstar. Awesome. I think she's going to be awesome in taking care of some of our buyers as well. JR has been with us for a little while. He is really
he's a good dude.
JR's awesome. He's so good at taking care of buyers. He really has awesome, calm, cool, and collective demeanor, which is great. Jacob's new to our team as well. He's going to be working alongside Jessica so she can do more and more each day for her buyers. So we've got some good things coming for our company.
Land got to do some housekeeping here, guys. Definitely with these all-time low interest rates, we talk about appreciation, maybe 30% across the nation since 2019. Boy, that's not normal times. But I'll tell you, anyone will take it. If you overpaid for your house in 2019, well, thank this low inventory for making up for maybe you are overpaying a little bit then, but it looks like you're smelling like a rose now. If your home has gone up 30% or 15% in the last couple of years, man, that is a huge number. Anyhow, land contracts, John, yes, you have to pay those off eventually. So a lot of families out there had some trouble in the past, want to throw it out there. We just talk about refinancing, John, and ways of lowering your interest rate or your term of your mortgage. But of course, you could do a cash out refinance and pay off a land contract on an FHA. And more importantly, pay off that land contract and get that lower interest rate and stop paying that land contract 6% or even higher.
Right. If you're looking to take cash out, then you're going to have to go with that FHA loan. But we use it as a stepping stone loan if it's something that you want to be where there's an end game somewhere different. So, yeah, let's take a look at it because you're right. You have to pay it off at some point. Land contracts usually have a balloon payment due. And, but number one thing is making sure that you've been in that land contract for 12 months and it's recorded.
All right. Anyone out there with a land contract or a second mortgage, call Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. We're up against a quick break. When we come back, all of your calls, 248-539-9797. We'll be back. All righty, welcome back to the show, 944. You got it on the Hardcore Mortgage Real Estate Business Show. We take care of your real estate here. Of course, Kevin Stewart joins us. Stewart Team Real Estate Partners in downtown Rochester. Got their cool little building there. And, of course, lots going on here all across Southeast Michigan. This home ownership has really taken off since the pandemic. Kevin, we want to be a part of all this positive stuff. Of course, heavy heart still, continued prayers and wishing well for all our families out there in Oxford, of course, in a community real close to you too, Kevin, out there. Lots of clients out there at Wayne. Again, we continue to heal out here and try to do the right things and say the right things to each other. And during the holiday season, I even got a little bit of love on my side here, John. And I'm an angry guy. Harry, who's angrier than me? Harry will be the first one to tell you and feel a little love here. But call
Harry's just shaking his head on Zoom right now.
You know, Harvey, we're all work in progress, so it's okay.
We're doing good here. And again, just try to do the right things for your friends and family. And Kev, sometimes you buy that house, and we talk about the stinkers out there, 25 to 38 days on the market. That used to be considered extremely normal times, Kev. Now sellers get a little bit antsy. Maybe they've got an eyesore, something that they're not picking up on. Those are sometimes pretty hard conversations to have with your sellers. You got to bring down that price.
Yeah, currently people think that if you're on the market for 7 to 14 days, holy cow, clearly we've done something
with your
wrong.
house?
And they start to hit borderline a panic button. It's tough to watch sometimes. And it's about making adjustments. Sometimes it's about making adjustments to the property. Sometimes it's about listening. We have to listen. We have to take the feedback, not take it personally. Right? That's hard, taking emotion off the table and thinking tactically. And yeah, sometimes you do have to make an adjustment, right? We do the best we can to put together a pricing strategy that makes sense based on the information we have in front of us, what we know, and then all of the parties that be. Making sure that everyone's on the same page. And having the price conversation isn't always easy, but generally speaking, if the price isn't right, I don't care what the conditions of the market are. If the price is way over and you overshoot the moon, you're not going to sell. You're going to sit on the market till kingdom come. It's just not going to happen because value is still what a consumer is willing to pay for a product. Always. That's always been the true definition of it. In our industry, we know it's not always what a buyer's willing to spend, but what a bank's willing to lend. Right? We know that that's a true thing, but this last year we've seen that sometimes that doesn't matter either. People are willing to put the cash behind it and put up with that and say, no, I want this product. But we still have to have the value that the consumer and the buyer sees and what the seller wants to sell for line up. If that doesn't happen, a property is going to sit on the market.
And we got to set our expectations on the front end, right? Here's what we're expecting to do. And if it doesn't work out, here's the next step. It's Bobby Fischer and chess. It's just making sure you're adjusting to all the moves that could happen. And when we're talking about these appraisal guarantees and or purchasing a home that might be at the highest point, you got to understand that the appraisal might not come back at the value that you want. And if you're going to put it in writing that you're still going to purchase the property, understand what that is going to do to your bottom line and what you have to bring to closing. And if you're not doing that on the front end, if your realtor, if your mortgage person is not doing that on the front end for you, make a change, because they're not doing you a service by making sure that you're prepped and prepared.
And
go ahead, Kev. I was going to say you need to have some basements and ceilings on the. You need to let the language written up on the addendum.
Oh, absolutely, it's got to be written. And we have people all the time that think that their property should be at X, and we believe it should be at Y. And we have that conversation right off the bat. We build a plan for what that looks like. Yes, guys, we can try it here, but understand it may end up landing here. And you have to have that open and honest conversation right off the bat.
Right. Yeah.
Hey, 248-539-9797. Look, I won't read the ticket text here, and sometimes they're even scarier than everyday life. I'll tell you that.
Get that guy to call in. He's texting over and over again because he doesn't have anything to do.
Maybe I'll give you half the story. Look, Kev, I've been around for 30 years doing mortgages, and I've seen the ups and downs and things that transpired. We talked about it. Things change quickly in the industry. The last 2 years has been different than my last 28 years and the way we conduct our business on the real estate side of things. And, it's always these, there's a bubble out there, and I remember the old times and this and that. The fundamentals aren't the same anymore. John Kolb and I can go on in hours and hours. The fundamentals of a bubble market are not what today's market's like.
We could go into a multi-hour. We could take the rest of the day to discuss the reasons why the crash of 2008 and what we're dealing with currently is a completely and utterly different situation. I mean, there is literally no parallels between the two. There just isn't. And if people understand the true economics of why the market crashed in 2008, the reasons why it was irresponsible lending with irresponsible borrowing, there was a lot of lack of accountability across the board from just about everybody in the industry, and that has changed. I can tell you the restrictions that came out of that, and the mortgage lending standards that came out of that, and the differences and the nuances in the market, because I had a front row seat for that. I was here for it too.
Yeah.
Right. I was in 2005. I watched the crash from the front row. And it was ugly. And so I did a lot of time learning why that happened and what were the things that caused that to happen. And I haven't seen any of those things happen since.
It's completely different marketplace. It just truly is.
The banks don't want your house back. They've got all these plans and programs set up for they'll put you in forbearance even if you don't ask for it. Look at what happened during the pandemic. Banks were ready to go. The forbearance, Harry's favorite F word, deferment. And there's just ways for them to keep you in your house so that they don't have to take them back.
And we're at the highest equity position we've ever been in as a country. Value compared to how much people owe on their home. So the difference is the average and the majority, not average, the majority of U.S. homeowners have a 20% or better equity position in their home. So if they have to, or they have a job loss or a reason that they have to sell, they're just going to sell their house.
You could rent
it. They're just going to do something different. Right. They're just going to pivot in a different form. The problem we had before is that people were at 102, 105, 110% of the amount that they owed compared to their value. And then when value started to fall, it fell quick and it fell super fast. And all of a sudden, nobody knew what to do. That situation is not here anymore. People have too much equity in their home for that to
There was
happen.
a lot of speculating and the guys getting into the rental industry that had no idea even how to buy a place, how to manage a rental property, and that was also part of it. Look, 7.7 million entered into forbearance. Only a smidge over 1 million people are still on forbearance. They are not educated on it. They need to make the phone call, reaching out to anyone who's on forbearance to make the right phone calls, get more professional people and more experience in your life. Mortgages are not just about what's your rate. What's your rate? That's nonsense and garbage. So if that's the only thing you're asking yourself, you're off to the bad start. Get more professionals in your life, John. I like that theme.
Yeah, absolutely. We always say this, and we say it most of the time around Kevin, is you got to work with a team. You got to have a team of people that you trust and that you can call up and ask some questions. I know Kevin's phone is constantly ringing from people that he's not even doing transactions for because they're asking his advice and he's giving the advice that he knows to give. Harry's got some info that he wants. He's waving at me on Zoom. He's dancing. His dog's jumping through the window.
I think the difference now, if that gentleman who's ticket texting in you is using the word crash, the difference between crash and a correction is monumental. If you don't think that there's going to be a correction, there will be a correction. The difference between a correction and a crash is monumental. So there will be a correction, Kevin. We can't go on every week and say that the appreciation level, the prices, the seller's market is going to continue forever and ever and ever. There will be a crash, everybody. However, the fundamental difference is all the numbers point in a direction of economic growth. Okay, look at the CPI that came out yesterday. Look at the jobs report. Look at the unemployment report. This is not the same triple storm that hit in 2005, 2006. So therefore, when people are negative, will there be a correction? Of course, because everything has to come back. But there will not be a crash like there was in 2005, 2006,
I love the term correction because I completely agree that that's what's going to happen. I think we're going to have a pullback. I think we're going to have a slide back. But I think we've all discussed it's needed. The speed at which the market was pumping this last year is unsustainable. Eventually, there has to be a little bit more stability inside the market space, and everybody does need that. And so some people are going to view that as the start of a crash. But what it is it's a natural economic correction that has to happen in order for growth to continue to sustain. Right. It's a must.
Right. You can't just keep growing without having a little bit of pullback.
It's eventually unsustainable.
Right.
Doesn't mean, Kevin, this afternoon you might not get multiple bids on one home, and it's going to go for top dollar because that's still happening too.
Oh, that's still happening every single day. I mean, we have a home that I'm having a conversation on my way back from here today talking about when our deadline's going to be because we got 3 offers on it last night. It was been up for 24 hours.
Oh boy, here we go.
So it still happens, right? It's not that it doesn't happen. It's just, but we position the price of that home very, very, very well. We spent a lot of time discussing where we needed that price to land in order to get this situation.
Now, are
That's
you
what they
still
wanted.
are you still accepting offers on that house, or what's your plan here? Are you like through the weekend, or do you just take those 3 and make a decision?
So our stance is probably going to be, because we had already discussed this strategy. We knew what was going to happen coming in. The seller had already told me they wanted some resemblance of a bidding process, but they're not going to make it extreme.
Right.
They also are living in the home, so continuing to show that home for 3 or 4 or 5 more days doesn't sound super appealing to them.
Right.
They have one of those 3 offers is fantastic. It's a great offer. They don't want to sacrifice that offer, so we'll probably keep it small. We'll keep it end of day today, beginning of tomorrow. We'll keep it just a day or so more. There's some people that haven't got into the home yet because there was a frenzy to see it. So they want to keep it fair, but they want to keep it tight, and then they're going to accept an offer and move forward.
Highest
It's
and
gonna be as
best
simple as that.
usually works out. And again, if they've got a mortgage on store, of course, they can get that done in a timely fashion. Of course, your seller's motivation. They've got another house. They ready to go. They've got their plan all figured out.
Yep.
Kevin Stewart, Stewart Team Real Estate Partners. Always great to have you on, Kev.
Thanks, guys. Really love being here. Super happy to be back in the studio.
All right,
This was
good. We're
fun.
going to have you back on in 2022 a lot, and definitely Harry Glanz on the Zoomcast. Always great to have you on, Harry, and have a wonderful day. John Kolb, the same.
Yeah. Hey guys, have a great Saturday.
All right, we got Pat Caputo coming up with sports, Costa later in the day. Keep it here. Sports all day long on 97.1 The Ticket. Be sure to call Capital Mortgage, 1-800-LOW-RATE, the best mortgage banker. Catch you next Saturday.